Welcome to Trusted Sources Research View. Recently, we published our monthly Fundamental Drivers report. In this report, we summarise our high-conviction political economy views. These are the fundamental views that support our market calls. The market calls themselves are in other publications, specifically our Absolute Views report and our Emerging Market Strategy Monthly. This month in the Fundamental Drivers, for China, we focus on the normalisation of PPI. This is something that we've been looking at for a few months now, and we see it as the first sign of structural change and an indication that growth may start to stabilise next year. Now we're starting to see benefits to corporate balance sheets. Higher PPI means that real interest rates are lower and debt burden is less on corporates, and we expect this trend to continue. We're seeing reduction in overcapacity, higher commodity prices, and also favourable base effects. In Brazil, President Temer is starting to gain traction on his reform agenda. There's a window of opportunity that has opened up since the municipal elections, and the government is taking full advantage of this. The current focus is the constitutional amendment to cap spending, which will be a significant step towards fiscal sustainability and demonstrate, if they do succeed in passing it by the end of the year, that, as we expect, will demonstrate that the government is serious about reining in spending. But more is required. There are still serious challenges ahead, not least the Lava Jato investigations and the plea bargains, which could see members of the government incriminated in the various scandals. In India, we're focusing on improving consumption and monetary policy, which we expect to contribute to GDP growth. There have been salary increases from government employees and also a good harvest, so consumption in both urban and rural areas should pick up. The government has also been focusing on structural reform with a strong focus on ease of doing business, most recently with the GST. Monetary policy framework as well will contribute to growth. The new governor of the RBI and the new Monetary Policy Committee is likely to be more dovish than under the previous governor. And although there are medium-term risks around this in the short term, we expect a boost to growth. There are risks, however, not least the implementation of some of these reforms. And the GST in particular, we expect implementation to be delayed, and the government will have difficulty in achieving its April 2017 deadline. There are more detail on all of these issues in our monthly Fundamental Drivers report, as well as coverage of Russia, Indonesia, and Turkey. Thank you.